Today for a great day in terms of performance for me. I have to say that today I break my own records in terms of financial. It was a beautiful day with great trades. What most made me happy is that I was trading very well with great discipline. Responding the patterns and taking advantage of the patterns that I saw, and it was a great also management of the trade. So you're watching this, please click the button like. It's important for us to continue growing this channel and helping you guys. For the ones that are not subscribed, please subscribe this channel and also activate the notification in order that you can get new videos. So here in this video, my intention is to try to explain one first my trades, how they enter, what are the premises that I have for entering, for stops, how to manage it. The second part is basically the patterns, and it kind of the recap that I usually does. I usually do with the patterns, with the stops, with the targets, and what are the kind of setups that we see during the day. Hope you like this video, and please, if you have comment questions, please let me know in the comments regarding the trades, regarding the methodology. You have any type of orientation, you want any kind of orientation, let me know. I'll be happy to help. Okay, thank you very much for watching me. Well, let's start for the beginning. So we are in the Brazilian time zone. So usually we can start trading a little bit earlier than the U.S. folks that we have. But what I would like to show here is basically what was the performance and what were the trades that I got during today to complete a performance like this. So almost 4,000 net profit, 4,000 US dollars with 13 trades. We see this in points. It was about more than 100 points. Of course, it's not net because we have down here, but we have this quantity of points here. So it's really nice. Yeah, almost 100 points here cumulative, right? It's amazing. So when we goes to the trades, we see here that at the beginning I lost four, and then I got nine more trades, all positive trades. Right, that's what I'm gonna see here. We're gonna show you here, right? So, and you see here we started with mass at the beginning of the day, and then switch to ES, right? Trying to leverage the best setups that we have in the S. So usually I do that. So I start with M and mass, make some money here or not, and then I go and switch with the ES, especially at the beginning of the day. And during the opening, I do that in order to absorb a little bit of volatility. It's part of a strategy, right? You want to go with the ES, with the mini right away. It's okay. We need to always be conscious that at the beginning of the day, we have more volatility, so your stop needs to be wider, right? So that's basically the losses, right? So when we goes to the summary, we see that we have 69% of percent profitable, and we have 9 trades winners. So I lost four at the beginning, and then I won 9 consecutive trades, right? And the last one was this one here, bigger one, just one bar. And I'm gonna explain a little bit with details how I get these trades in order that you can also take a look on the way that I make my trade management. Okay, basically is that. So let me now switch to the beginning in terms of the trades. And this first part, I'm gonna show just my trades. Doesn't mean that are the best trade or the easy trade for the beginners, but my intention here is to explain how I did it and then how I manage, right? First one, the first losses trade that I have in mass. So if we got this mass here, we can see here that I start to trade very early in the morning, 6:30, right? The first thing that I did wrong, we have one, two, three pushes up, and this fell at Emma above this bar, above it high. This is high versus the previous high. So this is not a good trade, right? I took that one. I know that was a bad trade, and an exit here, right? And then I sold this bar below this bar, and I get trapped and exit here, right? And when this L1, this is an L1, L2 fail, I reverse this and also get out here. Look at this, right below this low. So those was one trade I lost, second trade I lost, third trade I lost, and then I bought this close, right? Bought this close to keep it, sideways, and then my stop was below this bar, something like that. It was 10 point. I lost 10 points here with 5 micros. Usually I did use 5 micros in all of this. So those were the 4 trades that I lost here, right? Basically is that, okay? Then I make a pause because I was driving, but when I get the office, I make this first short here, one leg, second leg, third leg down, right? Looking for this down because it has followed through. Was looking for this target here, right? So looking for this target here, 516, and I enter here, put my stop here, right? This bar, and then look for this. What's happening is that we have was a wedge here, very good wedge bottom, some spike and channel, wedge bottom, and I didn't exit. The right exit will be probably, let me see here. No, I think that it exit well above this bar. So above this bar, the the um, the premise is gone. But this bar, this is a good bar, so we can say that this bar could be enough to exit because we have 3 pushes down. But I stay, so I put my stop here and getting out above this bar. Okay, and immediately I bought with 5 micros again. I know that it was 1, 2, 3 consecutive bull bars, so we have a good edge for the second leg up. So I wait for this, let it go. But this is more part of the current session right now, and then I exit here. When makes 3 pushes up. So one leg up, second leg up, third leg up, wash here. So I exit when we didn't have follow through in this part. Okay, this, because this is a wedge, so like this could be reversed up, right? Could be reversed down. So in this case, when you have a wedge, you expect to see if you have follow through. If you don't have follow through, you exit. Like this is a precious exit, great exit, because that exit, you're not losing so much points, right? It's so close to the where you should be exiting here. So close, so you exit here, you're fine. So you're not losing points. You didn't left points in the table. So here Taking consideration this trade I made was my first trade. I made 20 points here. Come on, guys, 18 points here. So with that, I erase everything that I lost here, right? With this trade. That's basically the trade that I made in micro EMI, right? So that was the trades in micro EMI. When it goes to the mini, let me put it here like this. Let me. It was something like this. Let me tell it. So look at that. I didn't do anything here, right? Because it was micros. And then we have a wedge here, right? 1, 2, 3. And the exit on micros was here, right? So what I did is, okay, I did exit, but we still have a fail in the um, moving average. So I took this during the formation in the 1 minute chart, but there were a condition here. We need to see this clearly for me, and I'm gonna show that. So for example, this is an L1 and this is an L2 40. So I didn't want bars going below this 40 in the 1 minute chart, right? So I did exit quickly in the break even because what I was looking for was, as this is a wedge, was a acceleration up. Didn't happen in 40, so I exited. Basically was that. Okay, when 41 came up, I did buy it again above that bar, thinking on the acceleration that I'm looking for. This is a wedge, right? When you expect for a wedge, you expect two legs down, basically, and you didn't have two legs down. You have you have a small pullback here. So 41 is a great entry looking for this wedge failed setup. This is a wedge failed setup. Which failed BO here. Here. So that's the entry. The 41 is the entry for the wedge failed BO. This is a wedge. Here. That's the pattern. So what we're looking for wedges, we're looking two legs down. Okay, let's see, you have here a wedge, you're looking for two legs down. Okay, we didn't have that, so it might be a failed wedge. When you have a failed wedge, you're looking what? You're looking basically this move up there. That's the move you're looking for as a target for a failed wedge. Okay, so you see that target there. So that's having that in mind. You take 41 and then you spec acceleration up. We didn't have acceleration up here, but at the same time, we have three consecutive bull bars. So I wait a little bit more, put my stop below 39, or a little bit, put my stop below 33 or something, a little bit here, more wider, and wait for the first test on moving average. Why first test? Because we have a 29, right? And then 47. It's almost 20 bar without touching moving average. So I decide to wait for the touching and let's see what's happening. So touch, and that's 48. That probably is one of the best entries. Let's say this 48 is one of the best entries. This 29 is one of the best entry too, right? And one thing that we really need to take an attention here in terms of pressure. When we have a gap, micro gap open in a bar like this, for example, this means that this is the start of a wedge, of a spike. Let's say that this is the start of a spike or a leg, right? So like this. This is the start of a leg, right? And then this one, this is the start of the leg, right? So we have one leg, second leg, and this will be the third legs eventually. So it's another way to also think in a wedge. So in that sense, this will be another wedge here. This is leg one, this is leg two, and then up. This could be leg three, something like that. So you have one, two, three legs. Okay, that will be the um, the wedge, and then you have a clear um, trending line here. I will take this out because I prefer the line, this line here. So we have that trending line here, and that's important. All right. So then I buy 41, keep, these four bars, didn't like it, but that's okay. I think we have in the Globex, we have a kind of hive right here. So this will be something, there were a resistance here. So, but okay. So we have this two EMAs here, moving average together, and 48. So 48 is a beautiful bar, one of the beautiful bars of the day. And then you can decide what to do, right? When this 50 came up, was the biggest bar of the day. You have to decide what's happened. So you have here magnet here, so you have a clear target, right? But then it's the biggest bar, so making new high in the day. We are in a broad channel, so when you're in a broad channel making new high in the day, you have to really be careful because new highs always look, traders look for taking profits. So that's normal. So I wait one more bar. If I decide if it's a bear bar, even if dodgy, I'm gonna exit. So that was I did. 51 close it, exit. So I made more there. I made more. 11 points. 11.50. Good trade too. But at the same time, I decide to rebuy above that 51. So that's the best strategy, guys. So if you think that it's gonna could goes up again, so you can try it again, getting up. Then we see here, we need to be disciplined with the exits rules, for example, that I have. What is my exit rule for a swing? L2 setup. So if we see here, we have an L1 in 54. Right. I'm gonna put this in red because it's L. 54 is a L1 trigger in 55. And then we have an L2 in 58 trigger by 59. So L1, L2, double top, getting into a target on the tick, 53, and then a bar like 59. So an exit below 57 here, put my exit here, so I make some few points here, and immediately I sell below 59 here. but I know that it was selling for a minor reversal, so I will need to exit quickly. So I did it here with 11 points, more 11 points. So selling here, exiting in the close of 60. But by the way, is a climax bar, right? So into the moving average, in the 50 minute moving average. So that's why. So I did exit here, and then I was telling the people on my Discord server that I was, I was looking to see if we have buyers in the close of 60, so 62 have buyers. Of course, we have 4 bars, consecutive bars. Um, we know one goes up and even a micro gap here. There was not enough, but I precipitate myself and enter here in the close of 62. Okay, thinking on that EMA is gonna fail there. Put my stop below 47. Um, Wait. When 66 came up, I told the people this is the best bar ever you will see. This amazing bar. This is an amazing bar. So you can take I was already long, so okay. So 1, 2, 3, 4, 5, 6, 7, 6 bars again doing new high. It's calling take profit. Always is the 70 bar. That's what the reason I didn't exit, because by the end of the day, usually we have some good bars like the increasing volatility. So it's waiting for the 71 to 80 bar to close strong up, right? As we have this couple of legs after a wedge. So I was expecting a trend resumption starting this 66. And I told the people I think that we are about to close strong the day bull, and that was what really happened. But 71, 72 tries to go up and it failed. So 73, put my stop below 73, making a trailing. It was kind of, there were, if you see in 1 minute chart, this was kind of breakout in 1 minute chart. So what I did was okay, it's a breakout of a kind of micro wedge there. So I put my 1 on 1 because usually makes a measured move up down in that case. I'm buy at EMA. When I saw that it was at EMA, I put my limit order here, stopping 66, and let it go. Right, basically was what I did. So that was my entry, my stop here, 10 points below, and then I waited for 76. But what I didn't like it was 5 consecutive bear bars with this strategy, I think, but 4 consecutive bear bars, right? I didn't like that. So what I did is, well, it's my half. If the version is strong, um, they might have sellers at the 50% of this. So look at what I did here. So what I did is I make my retracement here, right, and see what's happening in the 50%. That's what I did, right? So 50% is right here. 78 goes there. So 77, fine. 78 goes there and closes below 50%. I didn't like that. So I put my stop at break even and I say the following. Okay, um, it might start the second leg down. So I'm gonna put my stop and break even. But in case of we have bars above 78, we can expect a new high. That was my assumption. And how did I capture this? I did capture it. It's easy, guys. Using 1 minute chart. Let me tell you how. So look at this. I get out below 1 minute chart here. That was my assumption, right? Below that bar. I did buy in the 100% of this measure move down. And then we have this. So look at this, guys. It says, and I'm gonna show you how we can interpret the um, the bars, because this is important that we can read the bar very nice. So one strong spike, and then you have this. When these two come, I say, well, we should have buyers in this close 372. Okay, and we have it. We have it here, we have it here, right? Basically, but they didn't like 380, to be honest, and goes below 373 with a micro double bottom, right? When 381 came up, I say that's the bar. You see one, two, and with this is the third leg, right? So, but it's gonna be the first time that it's gonna take in the touching the moving average, right? So when you're in a strong bear trend, let's say that this is a bear, and if you think that it's gonna go below, it's gonna go there below. So when it goes to the moving average, the behavior for a strong trend is to have a signal bar. Like, let me tell you, like what? Like this, right? So signal bar like this. It's testing here. No, this is not a good example. Like this. Oh, look at. Strong trend goes to the EMA signal bar, failing, right? So when you're in strong trend, it's what's really happening. Go to the EMAs, goes up, right? Basically, this makes a swings there. So in this case, if the assumption that we need to take here is, okay, go is going one time to test. Okay, doji is not a bear. Second time, doji. Third time, going even below, get buyers below bars, dodgy. Fourth time, going below, another dodgy. What's really happening? Where's the sellers here in the moving average? So that's the question that we need to answer when we are trading and taking a look on 1 minute chart. So in that sense, you have here a wedge even, right? Micro wedge here. 1, 2, 3 pushes up. So what I did is basically when this bar go up, put my stop there, right? And then break even and say, well, that's okay. But at the same time, I say, well, if we have bars going up, this bar here, look at this, guys. My assumption was if we have, for instance, this is a low probability, right? For instance, we have bars closing above this 388, then it's gonna be up. So I put my entry here. Once I did exit here, put my entry here and say, well, if it goes up, I'm gonna capture there. And that was my entry that you see in the 5 minute chart. That was my entry, and then I did get out there here, basically with almost 40 points. That was amazing. That was amazing trade. I didn't expect this, but I did expect to carry on this until bar, at least until bar, yeah, 39.75 points, until bar 81. But when this come, I decide to exit. This is really a gift in the 5 minute chart. You see that? Just enter here, exit here, 40 points. Amazing. So those are the trades that I did. Let me know if you have comments, questions regarding the trades. I will be really happy to answer your questions. And let me know if you have any comments regarding the trade management also, please let me know. This is the management that I decide to do for me. You can see those management in all my videos and all my live. It's pretty much the same rules that I have. I exiting L2s, right? I did enter when we have in a broad channel close to the EMA. I use wedge, micro wedge in the 1 minute chart to enter in favor on the trend. So I did that today too, and so on. So you can find that in most of the videos that I have there. So don't forget to give the like if you like this video. Thank you. Well, regarding the recap and the pattern, so you see here my marks for today. We started with the opening gap, so huge opening gap indeed. But then, we have an L2 bear flag. So if you go short here, it's a good short. You can look for this mission move down as a target, but even 7 didn't get it, right? And then we have this surprise macro channel here making a new high. Once it makes a new high, we can expect to have high low, high lower, right? So like this. So the thing is that comes into a micro channel, but we need to be present that we have already a micro channel here, so it fails. So this micro channel could fails too. Market has inertia, so we can expect the same behavior. So the what we can do here to get long eventually is to try to buy below the 50%, below 15 or below 16 here. So that's a good strategy to get it with stop below 7. But then this 19 was the best trade in that sense because it was a good signal bar, high low double bottom. And then this is a good trade for at least look for this measure move opening range. But in the long, you can also think is this like a double bottom and good setup for looking for this opening gap here and close this gap in the long. So you can decide to stay here to here. It's gonna be like a 47 points from here to here. If you hold it, you can. I don't think you're gonna hold as I didn't. So I exit here in the 30, 38. It's a good because we have 1, 2, 3 pushes up. It's a wedge. Getting the measure move opening range here. That's a target. So we might have more here. Probably more taking profits price action, right? So that was the first one. 19. You can get this for a swing, and then it keeps kind of sideways, but we see here an L1 failing and an L1 failing, and this is an H2 bull flag in 28, and the 29 perhaps was the best trade of the day. Is the breakout opening range trade 2029, and then you see that it's accelerating up micro channel, and then L1 failure, that is the trade, normal trade when you have a micro gap after a breakout like this. So breakout happens here 29, 32, and then 33 is a L1, so you can take that after a micro channel like this with high probability to get a second leg up, and it goes here in 36. Then we have an H1 bull flag here. This 34 leave a gap open. So 39 is a good H1 bull flag to get again in. And also trying to anticipate the wedge fail breakout here. That's happening in this leg. So in this leg, we can consider that we have a wedge fail breakout. This micro channel bear kind of scare us because, well, since the wedge is not gonna fail after all, but then 48 was a great signal bar in the EMA making a double bottom in the moving average, and then we can get long again here looking for this opening gap. So breakout leg 1, leg 2 here, right? Good bar. 50 is a good bar. It's the biggest part of all this broad channel, making a new high, so then you can exit here as I did in 51. I did, for example, and then you can get in again above 51. That is a kind of a pause. But then we have another wedge here, so we can consider this another wedge, right? And then L1 54 and L2 in 59 right after it got the target, right? When it got the target, then we have an L2 like 59 up to that one, so 59. But we need to know that we are looking just for a minor reversal here. We can get TBTL 10 bar 2 legs, so and you see that ends exactly in 10 bar 2 legs, right? 1 2 legs and then ends there. And the 66 is the bar for resumption. From resumption, usually after a TBTL, you get this 66 looking for height of the day at least. So 70 will be a good exit eventually, right? Another micro channel, and you at this time you cannot be scared about micro channel, but this is end of the day. You see we have 1 2 3 4 5 micro channels, and all of them fell, didn't get a second leg down. So on this, well, it's end of the day, but you have to assume that it's gonna make the same thing under the market inertia principle. But at the same time, if you're thinking that this is the end of the day, and then you might have a second leg for taking profit activity, you just need to monitor what is going to happen in the 50% in that case. If we have sellers in the 50%, this line here, and then we have a second leg down, then it's better to stay out. So, but you have buyers above 678, that is the high is above the 50%, then we might have a new high, or at least this target. So you can get this for getting this target. So that's what's really happened there. Things that we need to observe is signals of bullish pressure right after spikes for this breakout of the opening range happens, leaving a micro gap, so it means that it's a good breakout. This new second leg giving also a micro gap that didn't fill, and the third leg is this one, when we have a temporary micro gap here that was filled during 63, but it's a good point even for going long here in the moving average of 15 minutes. Another behavior that we need to observe is they were first time that goes to touch a moving average, which is, it just did a small pullback here. So there were not sellers, aggressive sellers in the moving average 15 minutes, 5 minutes. So you have this 29 as a gray signal bar making a swing on the moving average. And then when it tries to goes up 15 minutes moving average, it makes also a signal bar. And you see that the bulls are really eager to buy more higher. So they were not sellers on the 15-minute moving average. When it goes again to test both moving average, so what is going to happen? We're going to reject that moving average and get a good signal bar like this. This 48 was a great long. This 29 was a great long. This 19 was a great long for trying to get this opening gap. So 1 2 3 swings, and even this 66 beautiful bar, 4 good swings for you guys in the day. It was a day that I completed 80 points using those swings, so it's not common day. Usually we don't have good signal bars like this in a good locations like this. So hope you did a great day as I did. So let me know about these trades. If you have any doubt about those patterns, please let me know. I'll be happy to share my thought with you using the comments. Okay, thank you very much for watching me, and don't forget to click the like button. Bye bye.